Hey guys, you're back with Steph and Dennis, and today I'm taking over because we're going to be doing a full deep dive overview of my Wealthsimple Invest account now that I've had it for 1 full year. So we recently did a video all about my budget, saving, and investing goals for 2022, but today we're going to be breaking down exactly how my portfolio performed throughout 2021. If you don't know what Wealthsimple Invest is, it's a Canadian online robo-advisor. So basically you sign up, set up a portfolio, pick an investing account, and then fund money into the account. And when you fund money into the account, it invests it for you, which is what they call investing on autopilot. You're also able to customize your risk level, and you can see everything that's going on, your actual portfolio allocation, all of that in the mobile app, and I'll make sure we go over that in this video. But if you do want to see a full review and overview of the product that we did last year, we'll link that up top for you too. But for now, let's hop into an updated overview now that I've actually been using the product for over a year and check out how my portfolio has been doing. So first, let's start with a quick recap of my investing history, especially for anyone who hasn't followed along on the channel the whole time. I think it's really good to go over this because it shows you that you can totally change up your investing strategy, your investing platform, how much you're investing, all of that as you go. Basically, what's important is getting started once you know to get started, and then change it up as you learn more and as time goes on. So I started investing for the first time right after finishing university, basically, or actually literally a few days after my last classes. I went into the only bank I'd used since basically I was born and opened up a TFSA or a tax-free savings account. I didn't know much at the time in terms of risk level. That's one of the biggest things they take you through is that questionnaire of what your risk level is. I basically wasn't very sure. I was there with my mom and she just kind of was like, yeah, go with what the financial advisor says. And they had me set up with a very risk-averse profile, I guess because I didn't know a lot about what I was doing. And I also didn't know how much I should be investing per month. So they started me at $25. Now I do want to say that it's totally fine to start investing with $25 per month if that's what you can afford and you want to get started. That's great. In my case, I could have afforded to invest more than $25 off the bat. I did have an income coming in at that time, but $25 is what the financial advisor suggested to me. So that's what I did, which is pretty interesting looking back at it. So that's exactly what I got started with for the first year and a half or so of my investing, that $25 a month. It didn't add up to that much. And then about a year and a half, maybe after that is when I switched it up. I stayed at the same bank at the time because that's what I was comfortable with, but I did switch it to the online version of their investment platform so that I could do it myself and take a closer look. And I started investing $250 per month instead. So finally, another year after that, about 2 to 2.5 years after starting investing to begin with, post-graduating, is when I finally switched to Wealthsimple Invest. Mostly Wealthsimple Invest. I have a trade account too, but I put the majority of my money in Wealthsimple Invest. And so overall, I was investing $1,350 every month, which was a big jump for me. So that's where I was at the beginning of 2021 when I switched into this Wealthsimple account. So now let's actually take a look on the iMac. We're going to jump into my investment account and look exactly at what I was invested in, how much I was investing, and what my return has looked like after 1 year on that platform. Okay, we're here at the desk setup now, and let's dive right into taking a look at my portfolio and overall what it looks like in my actual investment account for 2021. So when you first open it up, sign into my Wealthsimple account, this is what comes up first, the nice long stretched out graph on the iMac. But basically you can see what I added in and what my account value was month over month. Let's take a look at my actual TFSA account. Here's the balance, what I've gained. So I've deposited $16,000, gained $1,292, and that's an 8.1% return as of today. So this graph shows what if I didn't invest any more money, which I'm not too worried about it because I am obviously planning on investing more money over my lifetime, but if I didn't invest any more money, my 17 or so thousand that I have in there right now would turn into about 150,000 by the time I turned 65, considering that I'd keep it at that same risk level of 90% equities. So that's what I'd be looking at right now. For a second, I actually want to take us into my history though. This is the graph I was talking about before that gives me a little bit better of a view of how my deposits actually went up and what my return looked like month over month. So you can see that they're really closely aligned. My risk level was only a 7 out of 10, or actually it was an 8 out of 10, but 70% equities. You can see that every time I deposited, it went up, but it was really slight. So like in March, for example, I was actually at a loss at that time. My net deposit was $10,000, but I was at $9,955 as my value in my account. The first time I saw an actual positive increase was, it looks like, about April. And then you can see it was slightly above every month through July, but not by a lot. When I changed my risk level in about July or August, that's when you see this graph start to separate, and there really was a big difference there. A lot of that's because the market was having these high returns, specifically on my equity side of things. I now had 90% equity, so I was more exposed on that side, so it started to make a big difference. And again, in December, we see that even more, the biggest return yet when I contributed more money. So something else I want to point out is under this graph, you can see the numbers, simple breakdown of your account performance. If you have an account, I definitely draw your attention here. It shows you again exactly what your net deposits were, what your returns were, and then what the simple return rate is. There are some advanced performance numbers too that you can look into if you're interested, but some other ways to look at how your return truly has been over the year. One more thing here is the activity. I won't actually click into recent activity overall, but it does break down every time you get a new dividend. So in December alone, I got $58 in dividends, I think from 2 different stocks that I have. But that's nice to track too. And the good thing about Wealthsimple is that they reinvest those for you. So now let's take a peek at my plan tab back over here. And I want to actually go into my portfolio. So like I said, right now I have a 10 out of 10 risk level, which is a 90% equity, 10% fixed income split. So let's actually view my holdings. This is exactly where I'm at. This I think is super interesting because it shows my actual breakdown of different types of equities. So sneak peek for anyone in our last video who had some thoughts on how my portfolio compares to the S&P 500. We'll be talking about this in the next section, just give us a minute. But you can see that my US equities holdings is actually 22.6% only, plus there's 5.6% of US equities that are Canadian hedged, so hedged against the currency risk. So about 28% total in US equities, but you'll also notice that that's in the Vanguard Total Stock Market ETF. So what that means is that it's actually invested in the entire stock market. So thousands of stocks compared to the S&P 500, which is just the 500 largest companies in the US. So you can't do a direct comparison between the two because it's a completely different stock that we're looking at here. But you can see that the performance of my US equities fund, so VTI specifically, was 16.1%. Now that's way higher than the 8.1% that my total portfolio is sitting at right now. And I'll explain that in a second, but that kind of gives you a better idea of how those stocks that I'm invested in did perform very high, the highest in my portfolio. So in the fixed income and gold, again, I only have 10% here, but you'll see that they actually did pretty poorly in terms of performance this year. I have a -3% for my government bonds, -0.7% in gold, and then cash, I'm only at 0.4%. It's just whatever isn't invested at the moment. So no real update on the performance there, but that's to kind of point out that that did drag down my portfolio overall. My goal is to switch to an actual 11 risk level, which is something you can do on Wealthsimple, just not on the computer. It puts you into a 100% equities portfolio. We'll talk about that in a future video, not this one, but if you have any questions on that or comments or a view of that type of portfolio, let us know in the comments. So this is the last little view of all of my holdings for now, and now let's talk about how this actually compares to the overall broader market and what other people's returns have been looking like for the year. So let's hop back to the couch. Now, something that's interesting and that a few of you brought up after looking at the past video where I said that my portfolio's return was only 6.6%. Now, in the last week or so, it's been hovering more between 8 and 9%, like you just saw in my portfolio, but that still seems to be a lot lower than the broader market, and specifically the crazy high 29% return that the S&P 500 had in 2021. So there's a few different things to talk about here, and the first I mentioned when I was showing you my investment portfolio, and we're looking at my risk profile. So for the vast majority of the run that the stock market was on in 2021, only about 70% of my money was exposed to equities, and of that 70%, only 25% was specifically in US equities. So what does that mean? Basically, my portfolio is a well-diversified portfolio, but because my risk level was lower, it also meant my returns were lower because it was spread across all of these different funds. On top of that, if we're talking about the S&P 500 specifically, that's only the largest 500 companies in the US alone, which we can't really compare to any of Wealthsimple's portfolios, because even if you have the highest risk levels of a 10 or 11, meaning that you're invested in either 90% or 100% equities, they do provide exposure to other funds that don't just track the US companies. So basically, when we were looking at the funds I hold before, I have funds that cover the Canadian market, the US market, but also emerging markets and other international markets too. Now, something else that we wanted to make sure that I pointed out is that despite all the headlines talking about how great a year it's been for the funds that do track the S&P 500, this is not the norm. The market delivering these huge double-digit gains year over year isn't something that we should all get accustomed to, especially if we're focusing on being long-term investors. Now, the reason that I say this is because there have also been years in the past that the market's actually returned double-digit losses year over year as well. All right, guys, that's a wrap for this video. We hope you like hearing how my investment portfolio has been doing over the last 12 months and for my first full year using Wealthsimple Invest. We'll have a video coming up soon all about the financial crash, what it is, what you need to know about it, and how it's coming soon. So stay tuned for that one. And in the meantime, if you haven't seen some of our previous videos, make sure you check them out next door, and we'll be back soon with more. Let's go.